Good evening, all. Ira Epstein with your financial market wrap-up. And this wrap-up is for, what is today? D-Day. Remember that? June 6th. Remember the year? I do. In any case, it's June 6th, 2022. By the way, I wasn't alive on D-Day, but it's important to remember World War II were free because of it. And that's very, very important. Not a lot of vets left, unfortunately. All right. As we take a look at today's market. You know, this was today a classic, to me, bear market rally day. Started off S&P sharply higher, all the indices. I'm looking at them. And keep this in the back of your mind, because people will say, oh, I don't know that we're in a bear market. Okay, you're in a bear market, number one. Number two, bear market rallies do what bull market breaks did. When you get a break, they were always short and the market came right back and you go, my God, they can't keep the market down. Well, in a bear market, the rallies can be sharp, up, and all of a sudden they're gone on you, and you go, what the heck happened? And they let go of you, 1, 2, 3. That's the definition of bear markets. It's the way that they work. I've been around this. I've been a broker since '69. That's a long time. I've never not had my license as a commodity broker, and since '69. And I've used it all the way through. So I've seen these markets. I've run brokerage firms in bear markets, bull markets, managed money, done all that, got some mileage on me. And when I look at these and I see people trying to go, oh my God, why isn't it holding? I start laughing. I have to laugh at a lot of the people on the different television shows that I'm looking at because they're looking for a bottom. And I go, why? You don't have to be the first guy on the corner. You don't want to be. You're going to get hurt. Right now, what's the overall trend? It's bearish. Not necessarily in all the futures markets. That's the stock market. How many times have you heard me here say to you, you want to be with the Fed. Don't take buy signals in bonds and notes. I have said it now for weeks. And today, you're back to 3.04% in the 10-year note. Come on. You were just down to 272. You've come right back. It's easier to get these rallies going than to get the breaks. And now what do you think the Fed's going to do next week? Next week, we're going to see the Fed go in with a 50-point hike. It's going to be no contest to say, hey, they're going to be in their notes, hawkish. They're going to want to see how this is working. They don't know. There's no evidence to say that they've gotten ahead of the inflation problem. Then they'll raise again in July. Those notes will be more questionable. Does the Fed at that point think they're ahead of the game, even with the game, or no, they have to even go more aggressive to get going? So that's the argument you'll hear. Do they do another 50-point hike? If they think they're really far behind and for whatever reason inflation just explodes in our face between then and now, 75 points. If they moderate, they will not stop. They will go to a quarter point at a minimum. That's how the Fed works. On the energy market, keep in the back of your mind the natural gas, you've got a heat wave coming. And that heat wave can be a son of a gun in Texas. And when it gets going there, remember, what was it, about a year ago when people's bills, they couldn't believe what they were paying for megawatts in an hour. Their bills went up 8-fold. And then there were lawsuits, I'm not paying, and all those stories. Well, you're back to it because you're going to be 100 degrees plus, and it's going to be lasting for days. And this is the test for Texas. Will their grids hold up? Bonds and notes, you know, you're going to get bounces, but so what? It's overall a bearish market at this point in time. Then we get to the metals, and again, it's been a good run in silver versus gold, and copper up off the Shanghai announcement that life is back to normal or getting there in a very quick manner, and other cities throughout China, which brings in demand. Now, I don't think it's demand all of a sudden. You turn on the lights in the factory, you probably have supplies that you got to use up. You probably had a back order where you were ordering. Remember, a lot of companies, they'll look ahead, and I need this in 2 months or whatever. You're placing your orders to be sure you get it. You closed down. You've got excess supply. The orders don't start right away. Just remember that. That's very typical if you've ever been around factories. As for the currency market, you're in sort of a no man's game here. We have the RBA, Reserve Bank of Australia, tonight going to announce what their interest rate hike is going to be. It's estimated between a quarter point to 50 basis points, 40 being a common number some are looking for. We get the European Central Bank meeting this week, and then we get our own. All right. So in the S&P, I don't see anything here that looks bullish. As I said, maybe the market can get back to the 18-week average of closes overall, but I think that would even be stretched, but it can happen. That's about it. Still a bear market. When we take a look at the daily chart, we certainly have congestion. It began about a week ago, and you can see how the market's got it. The near-term trend is up because you have higher highs. But all of a sudden in the market, if we come over to this high, we were at 42.02, and now we have a new lower high. So you're narrowing in like that, and the market stepped out of the trend for a moment. If you clear 41.89, it tries a pop to the upside again. Should the market break through the lows right through here, be careful. You could be back at the 4,033 level, the 18-day average, before you know what is going on. Where's the market run into the resistance? Well, if you don't see it, take my charting course called the Enhanced Bollinger Band course. This is for those of you that understand what a Bollinger Band is, but now you really want to know how to work with it. Timing and how to work with this, both together. And I said, first time you hit it, the pros are coming out. I don't look too bad on that. And you're in an overbought market. You could easily slip back here. Am I bearish? No, but there's no reason to be long. There's a big difference between the two. NASDAQ, the same thing. You get up there, you want to take money off the table. So a lot of people got caught in this. This is your opportunity. I know you're going to say, Ira, you're wrong. It's going to go through up there. Okay. Unfortunately for you, this is the futures market. If I'm wrong, I can always jump back in. But I don't think I'm wrong at this point. I think this is the zone of a lot of resistance. You're overbought. You've been there, and it's hard to get through that band. When you get to the Dow, same thing. Or is it? Well, let's see. If we come to the Dow, both numbers are not over 80. Monday, which is today, maybe they are. They are on the close. Well, it's only one day. We're both over 80. I don't know what today will hold. They're overbought. No. What about the Russell? Okay, let's see, because this was looking more interesting last Friday when we got there. There we come. So let's go to Friday. Here we are. Were they both over 80? No. So I'm so sorry I did that. I hit the wrong button. That's just me, human error. Let me get back to it. Wow. Okay, I've got a brand new one of these coming. I can't wait. Tomorrow we hook it up. It's here. I just need to hook it up. Both numbers not over 80, or they are? They are. Day one. It takes 3 days in a row to embed where you're switching from overbought to embedding. You could even be there tomorrow. You had an up day on a Monday. Often leads to a Tuesday decline. Let's see if that occurs too. VIX cash. If you get a rally in the stock market, you're probably going to go down to the Bollinger Band 200-day average in here. Here's what I think. I think if you hit that number, the Bollinger Band, the pros are going to write puts with the idea the market will go back to the green line. That simple. 30-year bond. You're down to the lower band after hitting the upper band. So you're sitting next to me. You're paying me $10,000 for my daily session, and that's what I would charge you. Ira, what are you saying? Boom, I'm going to hit you right in the ribs. What do you do the first time you hit a Bollinger Band? But I'm bearish, the Fed meeting, all this. Out you go. That simple. We take another look. You can always sell rallies, but the smart money is coming out for whatever reason. Well, I want to hold on to part of the position. I'm going to say you're not embedded. Do as you see fit. I wouldn't do that. 10-year note, identical game. When you were coming up, what was I telling you on the long side? Identical game. Now it's down there. Why would I change? That's the Enhanced Bollinger Band course. Go back, look at this yourself. It's there. You just have to have somebody point it out. Now, in the dollar index, I'm the happiest camper. By accident, I got wrong. Not an accident. I got wrong this market. I was telling clients to go short, and then we got lucky. We had a rally on the break. I said, get the heck out of Dodge, break even. And now the market is up from where you broke even, 50 points higher. So I'm happy. I thought you might go to the 18-day average. Why? You lost the embedded reading. Do you see this? Over 20, the next day, not. Next day, yes, 23. Out, out, out. You got to be gone. The odds are you're going back to the 18-day average unless you close under 20 the next day. 23 is a hard number to overcome. You didn't, and that's where you're at right now. I'm just telling you, I'm looking for the 18-day average. In the eurocurrency, look what happened today. This is the close of business Friday. This is today. You got a 77 reading. So now I am looking for this market to reverse course and go to the 18-day average of closes. We'll see if that happens, but that's what my work says should occur. Is it a reason to be short? No, it's a reason to be out of all longs. Very big difference. I don't like being short over the 18-day average. I mean, if you put a gun to my head and you said, Ira, every time you lose a reading, I want to go short looking for that number, do it. I can't argue that. Just have a stop over the highest high of the move as it made its embedded status and then falls apart. British pound, Boris Johnson won. They had the no confidence vote today. 148 members voted against him. You needed 180 for him to lose. He won the day, he lost the event. He has lost a tremendous amount of his power and the currency he carries with him. He either gets back in the fold or he's pretty much gone. That's a big number to lose by. He's got a lot of work to shore things up. It's rare that a prime minister loses the no confidence vote. But this was a resounding, hey, Boris, this Partygate, too far. Get back into the fold of the conservatives. Start talking the economy and tax breaks. That's the message. We'll see if the market gets back to the 18-day average. The trend is down. The bias is up since you're over the 18-day average. I don't see a thing there. Bitcoin, remember we talked. It's gone flat here. Now, I was telling my traders this morning that it wouldn't surprise me if this market tries the upside. It's had a big break from all here. So often you get this narrowness and it tries to go the opposite way. Is that a reason for me to tell you to buy a Bollinger Band? Never. But it gives me an idea that, hey, on pullbacks, I think you're going to see the buyers fairly aggressive at 29,839, and they don't want to see it under this break low of 29,265. If that happens, they're going to get very concerned. If you break out to the downside, I don't know what the number is, but it's certainly, I don't think it's going to stop at 25,000. I think it'll go shooting through that. You'll get a panic. In Brent versus WTI crude, it seems to be stuck here, but it's crossed over the 18-day average of closes, which gives which market the bias to the upside? The Brent. The higher the numbers go, the Brent will be stronger. That's the differential. In Brent, what do you do when you get to a Bollinger Band? Well, on Friday you got there. I know you made the higher high today. I don't care. Are we embedded? Well, let's look. You cannot count Tuesday's number, so let's get rid of it. But Monday, both numbers are over 80. Both numbers over 80 on Friday. Not that way the day before. So you could embed now your most overbought number reading right now. If it embeds on the pullbacks, I think the pros will buy until the red number closes under 79, but not on Tuesday. You have to wait for Wednesday. What about WTI crude? I think this is stronger. So we take a look, and we don't look at Tuesday. We go to Monday. Both numbers over 80. Come on. Both over 80 on Friday, and both over 80 on Thursday. You're embedded, which tells me on pullbacks, there's a moving average that I show in my paid subscriptions that I think the pros will try to buy. They'll bail if the market closes on a reading under 79. It's a long ways from here, looking for the market to retrace back up to the upper Bollinger Band. Gasoline is embedded. Pullbacks in this market, I think, are going to get bought as the market looks for higher prices. I just saw gasoline in one part of California was just about $10 a gallon. I know 8 is not uncommon in California. It's not everywhere, but I'm hearing lots of stories about it. Natural gas, as I told you, if you get that heat wave and if we see the Texas is strained, what's the next number? I mean, it's hard to measure. That's the problem. You're not embedded. You're at a resistance point. As friendly as that might be, I think the professional money isn't playing for it. I think they come out against the Bollinger Band. So these are the things I talk about every morning at 5:30, but in better detail. I want you to buy here. I want you to sell there. This is the exact number. This is how you enter. This is how you come out of that market. Here's why we're wrong to trade. Here's why we're dead right. We want to add to the trade. This is what I do, longer term, shorter term. I am not a day trader. I'm looking for the market moves. I cover 40 charts in all of this every morning. Each video is 16 to 20 minutes long. They're broken down so that there's a scroll bar in them, and you can just scroll. Let's assume you want to go right to the metals. Just scroll. Metals, big words. Let go. Boom. You're watching it. So you can get where you want, slip areas you don't want to see anything in. I mean, I can't make it easier. I'm trying to save you time, give it. It works on iPhones. We give you the app for it. We give you the app for your computers. Everything you can imagine. It's inexpensive. You're spending more on a Starbucks than my course. Than my subscription, okay? My courses are a bit more money. How do you get this? Just go to our website under the word research, or you can follow my finger, go right up here and follow that. Learn. That's what I do. I not only throw out trading ideas, reasons for them, I teach. I'm Ira Epstein. You have yourselves a good evening. I will see you all on Tuesday.